I'm going to jump right into the market update because I have a feeling you guys want to know what's going on with that. So when we do the market update, because we have investments in Austin, Houston, Dallas, and San Antonio, we like to know what's going on in all of the different markets. So for us, we want to kind of get a general idea of what's going on overall, and I'll just kind of point out what we're seeing for last month. So this is the January data. The February data is not yet out, but for all of Texas last year for, January of 2024 versus January 2023, sales in Texas were up 7%. Average price was up 3%. Now, up 7% is really something that should be celebrated when interest rates have, leveled out at the level that they are right now. Even though it's normal, I think a lot of people are still bucking that. And the fact that the average price was up in the month of January is anything flat is the new up when interest rates are, in the sevens. So that's super positive territory. And then if you look at full year, which is this section right here, year-to-date sales last year were down 11%, and the year before, 2023 versus 2022, they were down even more, again, just because of the initial shock of those interest rates. Last year, Texas overall was flat. San Antonio last month, sales were up 11%, average price was down 1%. Last year, 2023 versus 2022, sales down 10%, average price down 2%. Austin had the biggest run up and is experiencing the biggest run down when it comes specifically to price. Austin last month was in positive territory, up 4.3% in terms of number of sales, and the average price up 0.4%. But last year, the unit sales were down 10%, and the average price was down 8%, which was the biggest reduction in all of the large markets in Texas. But if I were to show the numbers of 2022 versus 2021, the average price was up 29%. So some of you guys who got here in 2020 or were holding on to houses for a long time, you got to experience that big jump. So the way that I look at it is, this is a jump in my equity, this is a jump in my net worth, because when you look at your balance sheet at the end of your life, you're going to be looking at your assets minus your liabilities, and if you've got a lot of assets because you've invested and held well, then you're going to be in good shape. So, but that was a market that took the biggest downturn. In Dallas last month, the number of sales were up 14%, the average price up 2%. Houston last month up 9%, and average price up 3%. Number of sales units in Dallas down 6, average price up. Number of unit sales in Houston last year down 12%, but the average price was flat overall. And I want to go ahead and do a little bit of a further breakdown. So that's the summary for the market update. But this is the further breakdown of everything that's happened in Texas, and you can also have the look back over the last several years. So that average price for last month, again, you see that's up 3%, that median price up 2%. Days on market is pretty much flat, so we've seen it over the last 12 to 18 months. You've seen that days on market number slow or climb, actually not slowly but pretty quick. So now it's kind of in a space where it's flat. The months of inventory, so right now at 3.5 months supply of inventory versus a 2.6 month supply of inventory last year. The way that I think about inventory is, if you are the last house to get picked and you are the last house to get sold, what is your liability as a real estate investor when it comes to holding cost, right? So you may just look at it and say, well, the average time on market is 64 days, so I'm going to use that as how long it's going to take me to sell my house. But the truth is, not every house makes it to the finish line and actually sells. So you need to look more so at that months of inventory number when you are doing, for me, 20 years in, I'm still doing a best case, worst case, most likely case. And the worst case scenario, I'm using the the higher number, which is typically the months of inventory number. And then I also want to caution you guys when you are doing your flips as an example, and you're trying to calculate your holding time, the days on market, the way that the MLS is calculated, they calculate it from the day it goes active to the day that it goes pending. They don't add in the extra 30 to 45 days after that it actually takes to sell. So not many people realize that. Most people think, oh, well, this is from when it went active to when it went sold. And it's like, no, there's another full months of holding costs. So if your holding costs are $5,000 a month, which is not atypical on a house in Austin, for example, where you might be paying a hard money lender anywhere from 12% to 15%, that can take money right out of your pocket. Our historical months of inventory is closer to about 6 months of inventory if you go back and look over the last 40 years. But if you go back 25 years ago, the way that we had the MLS was really like more of like a book that, or going back a little further than 25 years ago, it was like a book that got printed every month. And now, because of technology, it's a lot easier to have less inventory than it was maybe 40 years ago. So I think our true market equilibrium is probably closer to 4 months than it is closer to 6 months. So I'd say at about 3.5 months we're at about our market equilibrium, and that kind of stays in line with the fact that housing prices are in the up 0 to 3% range, because when there's no inventory, that's when we're seeing these 29% increases in terms of average price. When there's a lot of inventory, that's when we're seeing those sales prices flatten. At the bottom of this page, you can see what the average price increase and sales volume increases were going back 2020 to 2021. And 2022, 2021, and 2023, 2022. So you can see the big jump we had in the average sales price throughout Texas at 18.1%. 2022 was a positive year in terms of average sales price, going up 10.7%, but that's when the sales started to drop, primarily because interest rates started to rise in the May-June timeframe of 2022. 2023, I was thrilled that our average price was flat year over year. Again, considering the appetite that a lot of buyers have had has been, nope, I'm just going to rent, right? I'm just going to sign my lease for another year. In the Houston market, so I like to break down all the markets so you guys can kind of see which ones might be more interesting for you to invest in. Average sales price up 3% last month, days on market. This is the first time we've seen it actually take a little bit of a downturn. Number of closed sales up 9%. Pending sales, I like to watch this one because it's our closest leading indicator to what closed sales will be next month. So Houston had a solid January, and it looks to be going to be having a solid February as soon as we get those final numbers back. The numbers from the MLSs typically come out in the second week of the month. So if you guys are watching on our Texas REIA's Facebook page, next week you'll be able to see what those new numbers are. A lot of people have said, well, I see that the number of sales are down. Well, where's everyone going? Well, a lot of people have re-signed leases or staying in their houses. This stat that I'm showing here shows that the number of lease listings are down 1% in the MLS. So I want to be careful when you see that, because some people might say, oh, well, sales are down and leases are down. Does that mean people aren't moving here anymore? Well, when you lease a house and your lease is up for renewal or termination, the owner or the property manager says, would you like to renew your lease? And if it's a basic lease renewal, where are they not putting that property? They're not putting it in the MLS to even be counted as a lease renewal. And I think a lot of people have said, no, I just want to stay put. So this number may give us an interpretation of the market that may not be true. So it's hard to see the number of lease signings that are increased there. We do see that the lease price in Houston up 2.4%, and the number of new lease listings, so these are the number of new houses that are put out on the MLS for lease, has gone up 12%. So we've seen more properties go off market in the withdrawn status or the expired status over the last 2 years than we've seen since going back to 2010 when the market was at its lowest point. So we're seeing more sellers who are maybe would-be sellers would like to sell, but if their house isn't selling, then they're putting it up for lease. So that's pretty typical for us to see there. And the Dallas market has been probably one of our strongest markets. Average price up, only up 2%. Days on market, so you're seeing the days on market starting to flatten as opposed to being in, comparing it to 59 days versus 30 days when we were looking at the 2022 numbers as opposed to the 2023 numbers. The total number of sales up 14%. But it's interesting, it seems like Dallas pulled all of their sales into January because the pending sales are down 9% year over year. And lease listings, so you're seeing that same number that they're down 1%, but I think that's a little bit of something that could be misinterpreted based on where we are right now. Lease price was down 12%, so Dallas saw some of the biggest lease price growth in 2022 and in 2023, so it makes sense that it's flattening a little bit now. For the Austin market, average sales price up, but only up 0.4%, so basically flat. That median price, however, is down 4.4%. Days on market are still higher in 2024 so far than what they were in 2023. So we haven't reached that kind of tipping point like we've seen in some of the other markets where the days on market are flat year over year or down. Number of sales up 4.3%, months of inventory at 3.2 versus 3 months of inventory last year. Just to give you guys some perspective, I told you that the 40-year average in terms of months of inventory, so the amount of inventory that we have, has been in the 6-month range, but at its lowest in the April, May of 2022 timeframe. Months of inventory in Austin was 0.5 months of inventory. So that means that we only had about a 2-week supply of inventory here in Austin, whereas in some of the other markets got really low too, but most of them didn't see it too far below that 2 months of inventory point. Pending sales in Austin up 3.8%. Active listings, so this is kind of an interesting statistic as well, starting to go down. That's when I see this number, that makes me happy because at the end of the day, sales price is a function of supply and demand, right? So when supply, is when we're oversupplied, we see a lot of price pressure. When we're undersupplied, like we were, for example, 2021 versus 2020, if you see that bottom left number where the average price was up 29.3% year over year, we were very undersupplied in that market. Average price for 2022 versus 2021 still up. It was up 10.4%, but I will tell you that if you look at 2022, it was a tale of two completely different markets. With the first half of the year, that sales price was up even higher than that 10.4%, and the second half of the year, that sales price started to dramatically flatten out. Going into 2023 versus 2022, we saw that 8% decrease in prices. So, and some of you guys may be upset and complain because some of those decreases in value, if you will, were not reflected in your sales tax, right? So they're quick to jump it up, they're a little slow to jump it down. So for me, I use a company called Texas ProTax to fight my taxes, and I've been using them for probably the last 15 years. They've saved me hundreds and hundreds of thousands of dollars, both on my personal residence as well as on my rental properties, as well as on my long-term builds when I'm working with the city of Austin and it's taking me 18 months to, build a brand new house, as an example. So if you guys have not, and Texas Pro Tax is one of many resources, but that's the one that I've used and for many years, and it's they go down there, they know the process, they have the time to wait, they know exactly what to say to be able to get the results that they want, and they've done a great job. What was interesting though is this year I kind of felt like I paid them more than I needed to, only because I'm curious, did anybody in here fight their property taxes this year? Anybody? Did they give up super easy this year?
Yes.
Versus in prior years? Yes. So like I had some dramatic decreases, because what they do is they set their prices, they set the values usually in May, right? And then and sometimes a little bit earlier, and they say, well, this is how much time you have to kind of get this protest process working. And then, they finalize it after that. But we were seeing, like, in some cases, like a 10% drop on some of our properties. So I was thinking, wow, I thought you were going to have to fight a lot harder. And they just rolled over this year. And I think partially because, again, there was that change in the market, and they knew that they had to be responsive for it. Yes, sir.
I would just share something with everyone.
Yeah.
And, they've changed when you go to protest your taxes, it'll market and equity. Always check both, because otherwise you're taking away half your market to get your reduction.
Mm-hmm.
And I've had to take them to arbitration several times now, so it hasn't been, it just depends on who you get.
It depends on who you get. There have been times when we've gone in, when we have rejected the number that we've gotten in arbitration, and we have gone in to fight it and won or gotten it lower. And there have been times when we've gotten punched in the face and they actually tried to come up even higher. So there is risk there, but if you're hiring someone and you're agreeing to the values that they come out with, you're not going to that formal hearing. No, by the time you get to the formal hearing, they're not happy to see you in the first place, but they're really not happy to see you in the formal hearing.
Yeah, but you're talking about binding arbitration after the formal hearing?
Mm-hmm.
Yeah.
Yeah.
Because you can't fight it, it's done.
It's done. Yeah, it's done. And they let you know that that is a risk when you are going in there too, for sure. So the number of leases in Austin down 5% year over year, but again, I think it's just because some of those leases that were just renewals didn't hit the MLS. Lease price down 1% year over year. If we were kind of go back in the time machine a year, we would see that those lease prices were actually up last year in the range of 6 to 8%. So who in here has rental properties? Who in here has rental properties right now? Okay, so you probably got to have some nice jumps in your rental and your rents if you are kind of actively watching the market and adjusting them, because so many people had decided not to buy houses because of the higher interest rates than what it was over the prior years, and decided to lease instead. So San Antonio market, anyone here from San Antonio? Just curious. Okay, a couple of you guys. So San Antonio has always been more affordable than the Austin market. San Antonio is not quite the 2-for-1 sale, but it's getting pretty close. San Antonio is a place where cash flow in San Antonio is not an oxymoron, meaning that you can get some pretty decent cash flow out of your rentals in San Antonio. I would say it would be at a number that was below that medium price, though, to be able to get better cash flow there. Now, the thing about San Antonio is, and some people, are attracted to that concept of cash flow, but what you'll find in San Antonio is that the compound interest that you get, the appreciation that you get in San Antonio is just not as high as the appreciation that you get here in Austin. Now, I think those numbers are I think San Antonio is and San Antonio has edged up more over the last several years, and San Antonio is getting some different employers than what they had previously gotten. So more tech companies are starting to move to San Antonio, specifically like the data companies, just because what does a data company need? Real estate, what else? What they need to always be on. Running. If you are in Houston, what is your risk to always being running? Hurricanes. If you're in Dallas, what is your risk to always be running? Tornadoes and ice storms, right? And then Austin kind of gets a little bit of both. And what are you also looking for if you are a data center? Low cost of electricity. And did you guys know that the San Antonio price per gigawatt hour is 0.0002 cents less than in Austin? So if you're using a lot of electricity, that really starts to add up and matter. So we're seeing more of those types of companies enter that San Antonio market as well. And their labor force is, I would say it's not as educated as the Austin labor force, but the prices sometimes can be very enticing for companies that are moving there. So last month, the average price was down 1%, median price down 6%. Closed sales in San Antonio up 11% year over year. But if you look at this number in terms of average price in San Antonio versus Austin, right? So in Austin, you're at $553 for the average price versus in San Antonio, you're at $360 for the average price. That makes a huge difference. And I think at some point when they double deck I-35 all the way to San Antonio, which is probably going to be in our future at some point, it's going to need to be. In fact, double decking MOPAC on top of that would probably help us a lot. But I think there's a lot to be said for San Antonio, especially if you're buying and holding for the long term. And you can see the results in San Antonio. So San Antonio had a nice run in terms of the average price increase, up 16%, but still half of what it was in Austin. So if you're looking not just for cash flow in your rentals, but if you're also looking for those big jumps in appreciation. And I mean, if you think about it, a 10% jump on $460,000 house, $46,000 versus, a 5% jump on a $300,000 house, $15,000. That's a big delta in terms of your wealth and in terms of your appreciation. So definitely something to consider for that market.